Good evening and welcome to this session of the live virtual classes conducted by the Board of Studies Academics of the Institute of Chartered Accountants of India. Today we are starting a fresh topic. Sorry, it needs to be corrected. The topic is accounts of companies. Accounts of companies. Accounts. So this topic deals with accounting, okay, and certain rules and regulations laid down by the Companies Act with respect to the method in which accounts of companies are to be maintained, etc., etc. A lot of issues are there, and revision, reopening, and revision, etc., etc. We will also be talking about board's report of the directors, board of directors. And last peripheral topic would be corporate social responsibility, which comes in this area. Another important topic we'll talk about is not necessarily from exam point of view, but content-wise is NAFRA, the National Financial Reporting Authority, and its powers and duties. So the broad summary. So this is what we'll be seeing. The types of accounts to be maintained, the nature of accounts and how it's to be maintained and all that. Reopening and recasting, voluntary revision of accounts. As I said, NAFRA. I'm pronouncing it NAFRA. Actually, it is an acronym, which is NFRA. Okay, if you want to be particular, you can say NFRA. For convenience, I'm calling it NAFRA. I'm putting a consonant in the middle of N and F, which is not there. So suppose we put a small a there, then that becomes NFRA, National Financial Report. That national ka ye hai na, that if I put it there, it becomes NAFRA. So see, generally, I find today there is a big, fraction for acronyms that are also looking like words, especially related to the subject. We have something called POSH. I don't know if you know that. People keep on talking about POSH. So, in fact, for a short while, I was a little, thinking, because the English word posh actually means stylish or modern, latest, trendy. That's what posh means. Posh people are trendy people. They are rich people, especially. It's not just being rich. Not only are they rich, they are also trendy and, they follow the latest trends and fashions. POSH. But actually, the POSH is an acronym, Prevention of Sexual Harassment. Prevention of Sexual Harassment. The other day, I met one lady and asked her, "What do you do, madam?" She said, "Sir, I am a POSH trainer." Oh, wow, you're very posh like that. Then she said, No, I teach prevention of sexual harassment to corporate executives. Sorry for information. So there's a lot of attraction for such acronyms. So NAFRA and power of central government to prescribe accounting standards. And we'll be talking about audit reports and board reports. Also, we'll be taking up the topic of CSR, corporate social responsibility, certain other procedural aspects, and compulsory internal audit. Which is, see, CSR and internal audit are very important from the exam point of view. From the exam point of view, CSR and internal audit are important. Okay, though they come at the fag end. And some other topics are also important. We will see that. As and when they come, I will tell you which is important. When I say something is important, it doesn't mean something else is not important. It means relatively less important from an exam perspective. Okay. So many of you have wished good evening. I saw the message by Mr. Linga, Ms. Pooja, and Geeta ji, Kuldeep Nagar, Jaya Manocha, Tanu, Adil Khan, Navneet Maurya, of course. Okay. So fantastic. I'm glad I thank you for your greetings and greet you all well. And move on to the first topic. Maybe some of you are quite familiar with this. It's not new to you. You would have studied it in company accounts, auditing. Wherever you go, it will all come again and again. So every company shall prepare books of account and other books and papers. Friends, even if I myself violate this rule, let me anyway tell it. See, it's not books of accounts or book of accounts. It's books of account. Plural of book of account is books of account. Just like we have father-in-law, mother-in-law. When you want to plural, it is fathers-in-law, mothers-in-law, right? Brothers-in-law, sisters-in-law, and so on and so forth. So books of account. It is not book of accounts. Okay, or books of accounts. Some people normally miswritten as books of accounts. My humble request, don't do that. Even if you see me doing it, point me out in my slides. Anywhere if you see books of accounts, it is wrong. Okay, correct is books of account and other relevant books and papers and financial statement for every financial year. See, they use the words, they use the singular here, financial statement, though it consists of many parts. So but still together, it seems to be a single whole document, which is called financial statement. Okay. You will be seeing in 129 that it contains many, many things. Still, together, it is called financial statement of a company every year. The purpose of maintaining books of account is to explain the transactions affected by the company in an accurate and systematic manner. Now, you might want to know what is, so these are defined. Books of account and books and papers are defined in the definitional preliminary chapter, in the definitions. Nevertheless, to help you understand it a little better, books of account is nothing but the summary of the financial transactions of a company. They may be contained in the form of books of prime entry and also secondary entry, like ledger, etc. And then summation of them in the form of a trial balance and a presentation in the form of balance sheet and P&L. The balance sheet and P&L, together with the notes and accounts, etc., 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 become the financial statement. So the financial statement is extracted or prepared from the books of account. So you cannot have financial statement without books of account. Okay, you cannot cook up your financial statement from imagination. It has to naturally flow from the books of account. Okay, if you're saying that the balance sheet reveals a true and fair view, you're saying the underlying transactions are true and fair, represented in a true and fair manner. Okay, their summation is what you get in the balance sheet. Their summation with the analytical and represent, disclosure become your financial statement. Now, these transactions which are recorded in the books of account should be represented by evidence now. Vouchers, papers, bills, agreements, deeds, all these become books and papers. Call it what you will. Anything. Today, books and papers need not be only in physical form. Even electronic form is okay. So electronically generated bill, books and paper. Okay. Obviously, it is not in printed form. It need not be in printed form. So long as it's available for me to check. That's the point. That is why the word writing was never used by Macaulay in the Contract Act. He was always saying put in the form, put in the course of transmission. You check it out. Offer, communication of offer. Okay, he transcends everything. He says where the offer is put in the course of transmission to the offeree so as to be out of the control of the proposer. So put in the course of transmission is a beautiful word. So once you type out an email and you send, it is put in the course of transmission. It is a document. It is books and papers. It is evidence. Very much evidence in a court of law, sir. You can't say, sir, email. It should be in writing. It is in writing. Anything sent through email is in writing. So instead of saying writing, I would rather use the word it is a documentary evidence. It is not oral evidence. It's documentary evidence. Beauty of an email is I can not only know what date it was sent, or what time it was sent, what time it was received. That much we can have evidentiary value from internet email. Okay. So the purpose of maintaining books of account is to explain the transactions affected by the company in an accurate and systematic manner. Explain the transactions. Okay, simply you can make entries in the books. Such books shall be kept on accrual basis. On accrual basis, according to double entry system of bookkeeping or double entry system of accounting. I use the word bookkeeping. It's a very old term. The word bookkeeping. So sometimes accountants were also called bookkeepers. Okay. Which is a very, very, shall we say, basic function. Today, though, as chartered accountants, you're supposed to know how to do accounting, the basic rules of accounting, three rules, the accounting equation, etc., etc. That's not our job. That's a given. That's a given. That's today, it's nobody's job. Today, it's most of the time it's automated. Okay. But the double entry system has to be followed, where every transaction should have a financial implication, either in the form of a current payment or a current receipt, or in the form of a potential liability or a asset, which we are entitled to receive. So some entitlement should be there, some liability should be there for immediate payment or receipt. If any of this is there, then that transaction is a financial transaction, needs to be accounted in my books. Even though money is not actually paid, if an expense is incurred, it has to be accounted in my books of account. I mean, you know all that. Even to tell this to you, I feel ashamed because you are all very much aware of these topics. You know what is accrual basis. Same way for income also. Once income is earned, it has to be accounted, not when it is received. Okay. I'm sure Ravnit Maurya would be eager to say, yes, I know all that. You know everything like that. Correct. You know it. But still, what is important is that what was the general principle laid down by the profession of accountancy is today enforced by statute. I repeat, what was the general principle which was formulated by accountants for our own ease of maintaining books of account and for arriving at the correct profit for the year for our owners, for the people who entrusted the bookkeeping to us. These are basically rules we formed. When I say we, I mean all the accountants, okay, going all the way back in history, right up to Luca Pacioli, the Italian monk, the Franciscan monk. Okay, Luca was a Franciscan monk who designed the system that is today known the world over as double entry system of bookkeeping. Was designed by an Italian monk for a very famous Italian banking family called the Medicis. In post-Renaissance or rather Renaissance Europe, just before the plague hit them, Italy was ruling the waves. They were a seafaring nation with Venice and important and a huge bank. They were bankers to the whole world. Some of, in fact, including the Medicis, were the ultimate bankers to the whole world. And so they needed extraordinarily good accounting. And in those days, the Catholic monks were the only people who were educated. In Europe, nobody was educated. See, today we see Europe and we think they are all highly educated people. Whereas in medieval times, the average European was uneducated. He didn't even know how to write his name. He couldn't read. Whereas the priest could. So when a boy from a family became a priest, that family got elevated because for the first time, that family got educated man in that family. Man who could actually read and write. It's a big thing for those people. So these monks were not only engaged in praying and doing all that mass and all that, they were also engaged in helping these rich Italians and French and British aristocrats and merchants in maintaining the books of account and all that. So that They were part of the church, parish, but they were also doing this work for the Lord. So there was a close relationship between the peerage and the church. So it wasn't as if they were, anyway, they were bound to do what this fellow said. So they did it. And that's how Luca Pacioli, for the Medicis, he defined this beautiful system of double entry bookkeeping. So when I say accountant, I trace my lineage all the way back to Luca Pacioli. So when we decided that this system would be used by us, we needed nobody's permission. No government had to give me any permission to use double entry system of bookkeeping. It was common sense, okay, or accrual basis. It was common sense. But what was common sense to accountants has now become statutory obligation for a company. So not maintaining on accrual basis, offense under section 128. Okay. But the problem is today, there are so many software, without naming names, that encourage what is known as DIY model. Today, everything is DIY, do it yourself. So some software promise the users, if you buy my package, you can do you don't have to know accounting. It will take care. All that sort of false and stupid promises are made by product sellers based on which non-accountants acquire these products, thinking that they don't need to know accounting. No, sorry, basic accounting is needed. The knowledge of accounting is a given. Okay, whether you are a chartered accountant at the top end of the spectrum or a Munimji or a local accountant using some software package, most cases Tally, in some cases, I told you, the DIY type of packages, whatever it is. And so these people need to know accounting. I have two experiences. One was I was taking an interview for an accountant for a client. A client wanted me to hire an accounting team. So I was taking an interview on behalf of the client. And one of the, invariably when they come, we have to ask one or two questions. So based on that, BCom, most of them had completed BCom. BCom students, they come and they had asked some question. So one of the candidates, I asked him a question that I thought was fairly simple. So can you please explain what is a contra entry? Please don't even give a reply to me. I get very angry. Your level is way up there. You don't have to tell me what is a contra entry. You learned it, and that's what I'm saying, something that you learn in BCom. So this guy, I thought you'll know it. Contra entries, sir, contra entries, sir, contra entries, sir. Like that, he was repeating the question again and again. I said, yes, man, contra entry. Can you tell me what it is? Very politely, I asked him. And he said, okay, sir. Then he asked me a question. Yes, can I ask you a question, sir? I said, please ask me. I'm always ready to answer questions. You okay? So he asked, do you have a Tally in your office? I said, yeah, we have Tally. We use Tally also. Yes, we have. Then, sir, you go to Tally on the menu option. You will find drop-down menu is there. In that, you will find contra. Just press that, sir. The system will take care. Wow. I felt so proud of our education system that produces this guy who tells me to go to the car. He doesn't know what is a contra. Let it be unknown to those who don't know. Now, the point here is then one of those DIY packages one lady bought. She's an engineer, startup, director of a startup company, engineer. She said, Mr. Srikanth, we are not hiring an accountant. We are using this ABC package that takes care of everything. You don't have to know accounting also. It will do. Okay, whatever. The accounts came to me for audit. So trial balance. My manager, that audit staff now who's running, he comes to the manager and the manager comes to me running and says, sir, this trial balance, share capital is debit, sir. 3 crores debit in share capital. I said, share capital debit. Oh. So I called up this lady and I asked her, Madam, how come share capital is debit? She immediately said, Mr. Srikanth, are you not familiar with accounting? Oh, okay. I'm not, madam. I'm a chartered accountant. Obviously, I don't know accounting. Can you please educate me? What, Mr. Srikanth, don't you know debit what comes in, credit what goes out? Correct. Debit what comes in, credit what. Capital is coming in, no, sir. I debited. Capital is coming in, na. Andarayana. So, you only told debit what comes in, not me. Rules are there, na. Debit what comes in, credit. See, That is, without conceptual basis, if they learn the rules, this is what will happen. And if a software permits them to do whatever they want without any control on the entries, that certain accounts cannot be credited, debited, certain accounts cannot be. Now that you are getting angry with me for getting into this sort of comments, I will bring you back to the law. Under the Companies Act, share capital can be debited only under very strict legal circumstances. Normally, share capital is credited, bank account debtor or asset account debtor, in case it's for consideration other than cash, to share capital. Always to share capital. It could be, you already seen that. Share application, share allotment. In all cases, it goes to share capital. Share allotment account debtor to share capital. To share capital. So share capital is always credited. Debit happens only in certain very specific circumstances. Anybody? You can give me answers. What are circumstances when share capital will be debited? You can't just like that because for fun of it, you cannot debit share capital. It's a legal issue, especially for a company account. Even for partnership proprietary, you can't. But for company, if you want to debit share capital, you should have a specific legal ground. Let's see if some of you can come up with it. In the meantime, I'll continue. Yeah, you are all. See, don't give me answer, yeah. Shame, you should not. You are all big shot, yeah. Come on, you shouldn't tell. Seriously, you are all CA intermediate. You are writing. What is this? Okay, correct. Beautiful, Jai Monacha. Forfeiture of shares is one beautiful example. Yes, when shares are which rarely happens in real life, but if calls are made and they are in arrears, and if permitted by the articles, the board of directors can forfeit the shares. At that time, there will be a reversal. Share capital will be the share capital originally credited will be reversed. To the extent of money not paid, the respective share application the share allotment or share call will be reversed. To the extent that money has already been paid, other than the premium, if any, the share forfeiture account will be credited. Share forfeiture account is a revenue account. Share forfeiture account is a nominal account. Nominal capital profit. Okay. Let me not teach you accountancy. Buyback is a beautiful example. In the time of buyback, when you go through the provisions of Section 68 correctly, then once the buyback is completed, you will debit share capital and credit shareholders and pay them. Or debit share capital, credit bank. One or two more are there. Buyback, of course, is the correct answer. Forfeiture of shares is the correct answer. Reduction of capital itself is there, Baba. When the capital is not represented by assets, you will debit credit capital reduction account, which is again a nominal account. Loss, capital loss, share capital reduction. It's a kind of a gain from this that will be reversed against the losses and adjusted. So capital reduction will not survive the reconstruction process. Capital reduction. Then final have one more. At the time of winding up, at the time of dissolution, winding up, last step in winding up, when all the creditors are paid, finally the capital will be distributed to the shareholders. Now, at that time, you will debit share capital. That will be the last entry. Share capital account debtor to bank. With that, no more company. Bank account is closed and given to them. Share capital is reversed. That's it. No more company. Dissolve. Thereafter, go for dissolution. Only in these circumstances, share capital can be debited. Okay, I just thought I'll also use it to reinforce your knowledge of company law. So, company accounts and company law are closely linked. You can't just like that pass entries left, right, and center in books of account of companies without having any relevance to the law. Okay, which is why this is a specialized study. Otherwise, anybody can do it. Can you and I build a bridge, sir? No. But you and I can actually develop a software. Many chartered accountants today possess enough knowledge of technology and IT and coding that we are capable of developing software. You don't have to be an engineer to develop software today. It's not necessary. Anybody can learn it. That too with AI tools today, coding is becoming fairly, but what you need is a domain knowledge and domain expertise. You can actually write very good code. If you know how to solve the problem and you know what the problem is, then writing the software is actually going to be easy. You don't need to be an engineer to do that. Okay. So, books of account includes records maintained in respect of all sums of money received and expended. Very old language, na? They can change it little more modern, na? Gen Z language. All money is received and spent. Okay, that's all. Expended means only is spent. Nothing. This is not some great word. Expended. Expenditure. Expenditure, hai na? That is based on this. Expended, spent. Money that is spent, expended, is expenditure. The word expense also comes out of this only. Expenses. Sir, I need some reimbursement of expenses, sir. I have gone for the audit, sir. I have spent for petrol and food, sir. Kindly reimburse my expenses, sir. Like that. So, all sums of money received and expended by a company and matters in relation to which the receipts and expenditure take place. So, receipts and expenditure. Actually, there is no accrual here. They tax straight away receipt and expended. So, accrual is built into the system. See, accounting is much, much more complicated than what Section 2, subsection 13 or Section 128 talks about, sir. Accounting is more complicated than this. Okay. All sales and purchase of goods and services, assets and liabilities of the company. And lastly, items of cost. Later on, when we come to audit and auditors, we will deal with this. What are the industries for which and which are the companies which have to maintain cost records? Also, which are the companies for which compulsory cost audit is there? But that is basically indicated in this, right? So, correct. Reduction of capital. You're absolutely correct. So, reduction of capital. Yeah, decrease in company's equity, you can't say. What is the purpose for which it is a decrease, you have to say very clearly. Conversion of shares into debentures, rarely I've heard it, sir. Madam Sangeeta Vaniji, rarely, I mean, why rarely? It cannot be done. Shares cannot be converted with it. Reverse is possible. Debentures can get converted into shares. Shares cannot get converted into debentures. Kindly relook at your sentence. I don't think there is any provision anywhere or even a use case where shares are converted into debentures. No. Debentures convert to shares, yes, but in which case share capital will be credited. So sorry, Sangeeta Vaniji, relook. Okay. At the time of winding up, it will be done. Good job. So, fantastic. Great. I'm so happy for your response and keeping up. These are all definitions. Book and paper, book or paper include books of account, deeds, vouchers. Do you notice one thing? Book and paper includes books of account. They include books and book and paper or book or paper include. Why include? Because book and paper is plural, not two, na. So include books of account, deeds, vouchers, writings, documents, minutes. What document you'll be seeing it in General Clauses Act. When you come to General Clauses Act, that is going to be defined for you. Minutes and registers maintained on paper or in electronic form. Friends may note, not necessarily on paper. It could be in electronic form also. So any of these things which is in electronic form is also a book or paper. I told you that. It's being confirmed now. So the term books of account is restricted, whereas the term book or paper has a wider import, and it includes in electronic form also, right? This is possibly important from exam point of view. If you can learn it now, it is enough. There's no need for you to study this again. Just listen to me and remember Yaad rakh dijiye. That's it. Books of account shall be prepared and kept where? At the registered office of the company. So, to begin with, it should be maintained at the registered office of the company. Okay. Yeah. To begin with, it has to be maintained at the registered office of the company. But suppose for some purpose, they want to maintain it in a place other than the registered office. See, I normally give this example, even in incorporation of company, I might have given, where a company is founded in Indore. So the Indore is from, so the founder is from Indore in Madhya Pradesh. So he was possibly born in Bavra or Mandu or wherever district and grew up there. But for higher studies, he moved to Indore, then settled down there, got married, settled down, became an engineer, then came out of the job, set up his own ancillary unit, started supplying all over the country. But he set up the factory in Bavra district from where he comes. He set up his office in Indore where he has his house and office, keeps moving to the factory whenever he wants. And he runs the business. He does well. It's a case study, oral case study. I'm telling you an oral case study. Okay. So he runs it. Very successful business. Across the country, they are having customers, except Madhya Pradesh. Everywhere else, they have customer in Tamil Nadu, they have customer in Kerala. I mean, they have customer in all over the place. Maharashtra, Gujarat, they have customers, and so they sell, makes money. 300 crore, 500 crore. Finally, they touch the magic number 1,000 crore. Now they go public, and now onwards, they cannot be in Indore now. So sentimentally, what this gentleman feels now, I will not change the registered office of the company. The first office where I set up in Indore, that will be the registered office, my office building. But for all other purposes, my corporate office will be in Mumbai. He has to shift out to Mumbai because Mumbai is where the action is. So he moves to Mumbai and he buys a nice place in Mulund and they decide to set up a corporate office there. They do that. Or Bandra Kurla, they hire one whole floor of a space and they take it up in the corporate office. Accounts is also to be maintained there. Now, so the point is, normally the company should maintain its books of account at the registered office. But in this case, this company wants, the registered office is in Indore, but this company wants to maintain its books of account in Mumbai at its corporate office. Can it do so? Yes, it can. They may be kept at such other place in India as the board of directors may decide. Okay? Provided the company should give 7 days, they should give notice within 7 days thereof with the registrar, give a notice in writing, giving the full address of that place. That's all. Hold a board meeting, pass a board resolution, and within 7 days of that, file with the registrar, and thereafter maintain your books of account. Obviously, they won't be maintaining manual books. They'll be having a whole set of servers there or a server there in which the entire accounts will be loaded. And possibly they might have a backup server also somewhere where the transactions would be mirrored. And obviously they would not be having a software like Tally or something like that. 1,000 crore company, they'll be using SAP or they'll be using their own ERP. Self-developed, whatever it is, doesn't matter. So the books will be maintained in electronic form in a server which is situated in Mumbai. No problem. It's allowed, provided you pass a board resolution and inform the registrar within 7 days. In case you have a branch office, the books of account of a branch office may be kept at that office. See, this company is a nationwide company. Mumbai is the corporate office, Indore is the registered office, and they have regional offices all over the country. Southern region head office, Chennai. Western region, maybe Nagpur, for sake of convenience. Northern region, Chandigarh. Okay. Eastern region, Bhubaneswar. So they're covering the complete country. So each of these regional offices is a branch office where books of account may be kept. So nothing wrong. The books of account of a branch office may be kept at that office. The branch office ka books of account can be maintained at the branch, provided summarized returns of the branch accounts should be sent periodically to the company. They don't prescribe when, monthly, weekly, quarterly, whatever, periodically. Okay, so these rules are to be carefully understood. Can we maintain it in electronic mode? Yes, why not? See, they could have simply said books of account and other relevant papers may be kept in electronic mode and leave it at that. They could have simply said sufficient controls, security, information security controls, etc. should be there. And they could even have prescribed that this should be monitored by a suitable professional. Instead, they define how it should be maintained. And therein we have wonderful fun. Let's leave that. Let's read this and see how technology they are describing for us very beautifully. The books of account and other relevant books and papers maintained in electronic mode shall remain accessible in India so as to be usable for subsequent reference. Plus, it is available 24/7 on the cloud. Yeah. No, cloud and all, no. It should remain accessible in India. That means server should be in India. I don't know what they mean by accessible in India. So, I mean, seriously, it's in the cloud. Maybe cloud is okay, provided it should be accessible in India. I'm not able to understand this anyway, because today most of us store our data in AWS, in Amazon warehouse, data warehouses, where it's cheaper, easier, faster access. Anyway, so long as they are not saying it should be, they are not saying the server should be in India. I hope not. What they mean is that it should remain accessible in India. So the link should be there for me to download or to view the data wherever it is, so as to be usable for subsequent reference. See how worried they are that once I enter in the computer, it will disappear. I will not be able to make subsequent reference. See, I sometimes when I read this, I feel so funny because it was 1980s, 990 ma. The computers came, first computers came. We chartered accountants became experts in computers right from that day. Some of our members were top members of the information systems audit community. Okay, I myself, I'm a certified information systems auditor, CISA. Many of us are DSAs. We are well aware of what we are doing. So it's not as if we will lose time. We are more worried about the data security. Okay, and the books and papers maintained in electronic mode shall be retained completely in the format in which they were originally generated, sent or received, or in a format which shall present accurately the information generated, sent or received, and the information contained in the electronic record shall remain complete and unaltered. Friends, once you enter some data in the computer now, it will not be in the form in which it was there in the document. Suppose you data punch an invoice, that invoice format won't go in. Only the data will go in. Later on, you want it in that same format, it will print it out and give it to you in that same format. Whichever format you want, it will give it to you. Anyway, they are so worried about the format, which is why you'll find MCA, absolutely everything has to be scanned and uploaded. Everything there to be scanned and uploaded. Scan, because they want it in the same format in which it is received. They want it in the same format. Whatever original format should be retained. I want to see it should not be changed like that. Anyway, so boss, they are the boss. Whatever they say, we will do. So now one more thing they said, which is good, which is very good. That is audit trail. Audit trail. Okay. For the financial years commencing on or after the first day of April 2023, every company which uses accounting software for maintaining its books of account shall use only such accounting software which has a feature of recording audit trail of each and every transaction. Okay. Creating an edit log of each change made in the books of account, along with the date when such changes were made, and ensuring that audit trail cannot be disabled. It's a very important point, even from an audit perspective. See, corporate clients, the software that they use should have continuous recording of audit trail. Means what? See, today, if you're since we're talking information technology here, let me as well give you the technology part, rather the IS part also. See, today, when you say financial accounting, friends, it's not as if the complete ledger is lying there in the computer. No, sir. What is lying in the computer is the data, the basic data, okay, which was collected from various sources and stored in a particular format in something called a database. So that database is the heart of my IS information system, my accounting information system. The heart is the data. Now, then I have a sheath, a sort of a control around it, which is the application level, where the data cannot be directly accessed by the user. The data can be accessed by the user only through a software or an application. Now, the application tracks who is the user making the change. For example, journal entry can be passed only by head accounts. Then only that user ID can pass a journal entry. Suppose somebody who is not head accounts, somebody below him tries to go for that option, the software will restrict him. Sorry, you don't have the clearance for this. But if the user ID of the head accountant is given, head accounts is given, it will open. It will allow you to do whatever you want. But it will track who made that change. So head accountant made that change. His user ID password was used. This is called audit trail. So that any editing, deletion, modification, everything will be tracked. So that you cannot go and do anything. See, you are allowed to make changes. For example, you made a change, you made a mistake, you can go and correct it. Suppose while punching some data, instead of punching 5 lakhs, you punched it 50 lakhs. Boss, you are entitled to go and change it. But the fact that you entered 5 lakhs is recorded. The fact that you entered later on, you went and changed it to 50 is recorded. Sorry, the fact that you entered 50 is recorded. The change that you made is recorded. Everything is recorded. Okay. Certain times, they might even say modification of accounts can be done only by this level user. All that. So this type of an audit trail is usually maintained as a system log. Now, this cannot be erased. Also, the audit trail should not be capable of being disabled. Disabled means for a short while, you cannot say the audit trail will not be noted. Then go there, make all the changes, come out, and then enable the audit trail again. No, should not. In fact, this is the job of an auditor. Whether audit trail is there, whether it is 24/7 monitoring, whether it can be disabled or not, you have to ask and report. Recently I reported non-audit trail for one company and qualified. I said, audit trail is not there. Then they enabled it. I said, we are enabling it, then go ahead. Till system it's enabled, we'll disqualify. We will qualify your report. Because from 2023 onwards, from first day of April 2023, see, this was actually introduced earlier, but because of unpreparedness of the industry, they kept on giving time. Finally, 23 April, they said no. From now on, audit trail should be there. So first day of April 2023, that means 31st March 24 accounts should be audit trail enabled. 25 March also. This for your information. Also, the information received from branch officers shall not be altered and shall be kept in a manner where it shall depict what was originally received. The information in the electronic record shall be capable of being displayed in a legible form, mean printing out and all. The audit committee or the board shall ensure there is a proper system for storage, retrieval, display, or printout of the electronic records. The printout is something that even whether MCA or Income Tax Department, whatever you upload in the IT department, whatever you upload, they say upload it, give me a printout. Upload it, give me a printout. If you even open your mouth and ask, Sir, I'm uploading. You can see on the screen. You want me to do this or you want to argue? Take a call. So I don't even waste time nowadays. I upload it for sake of safety because once it's uploaded, I get a proof of uploading. And that is enough for me in tribunal. That's enough for me in CAT appeals to say, if anywhere he says I have not given, I will quote such and such a day it was uploaded. Here is the proof. So they also won't play that game. Once it's uploaded, it's uploaded. But for his own purpose, I give him a printout. Because poor guy cannot read screen. They still feel uncomfortable with reading from screen reading. Though today there are excellent tabs available which can enable you to read easily. In fact, much of my reading, I easily read about 7 books. I read minimum in a month. 7 books. Sometimes 8 books also. This year I'm reading 8 books in a month. So my Goodreads challenge was originally 84 per annum, but I've crossed 80. I'm reaching 84 now. Still got another 2 months to go. That means that I might be reaching 8 books a month total. What I'm saying is, out of that, easily in a month, about 4 books are being read by me on Kindle. It is not on paper book. When it's available on Kindle, I read on Kindle or EPUB, whatever, on my Kindle device. That's good. So I think one generation not got used to it. So for them, it's still paper. But remember, every time you print out, you are cutting trees. So let's go green. Let's not use paper. Let's go for using electronic means of reading and communicating. In my firm, nobody prints. Everything is on screen. We have huge screens on the walls in the cabins where data is projected on the screen and we talk about it. We don't have to have printouts. Each person gets one printout. It's on screen. And their handheld devices, they have to read PDFs. So everything is there. Only finally where the MCA wants document to be signed and scanned, only in those cases, we print out, physically sign, scan and upload. Only where the MCA wants me to do it. Otherwise, everything is on digital. So they want printouts. No problem. We'll give you one. Whenever you want printout, I'll give it to you. What is that? We'll cut one more tree. That's all. Such record shall not be disposed of or rendered unusable unless permitted by law. We'll come to that point a little later. How long the books of accounts should be retained. Backup of all data, including data at foreign location, to be kept on servers physically located in India. Okay. It's quite natural, the need to keep everything in India. The company shall intimate to the registrar on an annual basis at the time of filing of financial statements, the name of the service provider, the internet protocol address of service provider, the location of the service provider wherever applicable, where the books of account and other books and papers are maintained on cloud, such address as provided by the service provider, whatever. See, these rules are made by them out of concern. Now, if any of you wants to ask me this question, should I know all this by heart? Rule 3 by heart. No. Rule 3, this part and all, don't waste your time remembering, mucking up and all. What you need to know is 1423. What you need to know is audit trail. Compulsory. Audit trail is compulsory. Be thorough with that part. This part is just good to know types. Enjoy reading it and leave it at that. Okay. This is important. 128 section is very important. Very important. This part. The books of account of a company maintained within India shall be open for inspection by a director. See, a director can inspect the books of account at any time. But that doesn't mean that you can come at midnight and knock. So any reasonable time during the business hours, you can come. No company or no CFO or nobody can say you cannot inspect the books. No. Why? Because he is a director, boss. He is engaged in the management of affairs of the company on a day-to-day basis. Even if he is a sitting director on the board, he is entitled to come and see the books. Okay, you cannot tell him, "Yeah, at the board meeting, I'm giving you no quarterly review. You see that." You can't say that. Okay. So the director's right to inspect, but similar right is not available to a member. You cannot say, after all, I'm a member, I'm a owner. Can I not come and inspect? The reason why director has the right to inspect the books of account, member has not got the right to inspect books of account. Why? Let's see. He gives some reasons. Why member cannot inspect books of account? Why is it? For all member, wow. So shareholder, I'm holding 3 shares in your company. Can I not come to your office and say, please show me the general ledger, show me the debtors ledger, show me the sales journal for March, for April? Can I not ask? Don't I have the right? I'm a shareholder in a company. I hold 5 shares. Can I not ask? Why I not entitled? See, nowhere it says the member is not entitled. Please note. It only says director can inspect. That means member cannot inspect. Books of account is not open for inspection by member. That is a fact, no doubt. But why? Why do you think it is like that? You start putting up your answers. In the meantime, I'll continue with this. Where financial information is outside India, copies of the same shall be maintained and produced. See, inside India, boss, I'll have to give you. Outside India, no. Inspection shall be done during business hours at the registered place or such other place where the books of account are maintained. Which at the registered office, at the registered office. If it's elsewhere, at that place. If he comes, you have to give it to him. See, this will be more relevant for small companies, closely held public companies, where brothers will be directors or cousins will be directors. One group will be running the company, another group will be only on the board. Now that those directors who are on the board now, who are not running the company, can ask, I want to see the books. What are you doing here? You are all telling lies, man. I don't believe you. I want to see the books. Now, it's quite possible that the director may not be capable of reading the books and understanding. They cannot authorize somebody to do it. I have done it for many crimes where there's a dispute. I have done on their behalf. I have audited the books and reported to them. Director. So one director will entrust me. I have done even it all. In one case, it became forensic audit itself by itself. What started as a routine inspection of the books went on to become forensic audit because there were so many bogus bills, so many things. We made a preliminary report to the client saying we found that this is what we have found, but we feel that these items are all bogus. Though in confidence, I'm reporting to you confidentially because tomorrow you can't quote it in a court of law. I cannot come and give evidence. But since you have hired me, I'm giving my opinion or my suspicion that. Then they said, would you like to be given more opportunity to do a forensic audit? I said, engage me, the directors, if they appoint me as a forensic audit, I will do it. With the authorization, yes. I went on to prove fraud, 4.5 crores of fraud, booking, billing, cheating the other directors and, siphoning funds out of the company. Then that was used by the advocate in the court for final settlement. And the other directors. So between them, interstate settlement between owners, when it came, this was used for correcting that. Who has to pay how much information? In fact, I was kept in the wings as an expert witness. The lawyer was keeping on telling me, I may call you. But luckily, the culprits accepted. So they didn't have to prove it in the court of law with my evidence. So, these are all quite natural. Okay. So let us see what answer you are given. Yes, Mr. Syed, the audit trail system is with effect from 1/4/2023. Yaad rakh dijiye, please, all of you. Absolutely. SAP is an extraordinarily powerful, thing. SAP is an extraordinary example where user accountability is there. Correct. And Mr. Arun Sagar also makes a good point. Converting old equity into new issue means maybe subdividing and all that. even then, the same share capital only is there. No? It is not new share capital, etc. I think while subdividing, you might do that, where actually you don't have to do that because share capital now gets divided. That's all. The same amount only. There's nothing, it's not going up. Okay. So I don't think so. Anyway, it's a good point you're making. Thank you, madam, for being inspired for whatever reason. Okay. If you're inspired, I'm happy. It can be a non-secret if shown to correct. Absolutely correct, Mr. Kuldeep Nagar. Instead of using non-secret, you can say confidentiality is there. So, because members need not have confidentiality. Now, director is bound by confidentiality. Whereas member is not bound by confidentiality. Whatever he sees, he can go and tell people. So the confidential information will be known. Correct. And see, a competitor may buy 5 shares and can come and inspect your sales journal and know your customer base, your last quarter sales, everything he will know. So corporate espionage will become very easy. Okay. And as you rightly say, Mr. Pranav, there are numerous shareholders. Then every day they'll be on Tirupati queue waiting for inspecting the books of account. Yeah, I have no better job than showing these people. Okay, absolutely correct. And director is a key person and he is responsible for the whole operation. Whereas member, so absolutely, due to confidential information, that is a correct answer. And that's why members are rightly not given the right to inspect. After all, at the end of the year, you are getting your annual audited accounts, which is why the auditor is there. The auditor is appointed by the members. I represent the members. On their behalf, I am auditing now. Why are you worried? Aram se, you be at home, enjoying life, okay? Eating paratha, don't do anything. I am here to audit on your behalf. At the end of the year, I present your audit report to you. I present it to the shareholders. I don't give it to the directors. I present it to you. So on your behalf, I can go anytime and I will ask the right questions. Don't worry. My job is to protect the interest of the shareholders first and foremost. Correct. Forensic audit is an audit which is meant to discover and report on fraud. So you can instead of using forensic audit, you can say fraud investigation audit. Forensic. The word forensic is used because many techniques are used. So including investigation, what shall I say, fingerprint. So in this case, forensic auditors generally work in tandem with police department. So it's a big ocean subject. I don't want to go there. But with regard to commercial fraud, etc., corporate fraud, at our stage, we will give our findings and go. Then it is up to the board of directors to go to the police and file a complaint and all that. In many cases, I have done something where I have given. In one case, I went to the suppliers who had given bogus bills and asked them and recorded that with the permission of the supplier. I recorded the transaction. Because the supplier also said, sir, I am not interested in getting into this. My intention was not fraudulent. He wanted a bill in this way. I took the check from the company and I gave him cash. Will you give evidence? So they gave oral evidence. We recorded it and then we produced it to the board of directors. Thereafter, it is up to the company to file a complaint against the director and all that. Okay, that is called forensic audit, where we collect all the evidence and create a case against the who committed the fraud. So that such a case should be viable in a court of law. So all the evidence should be very, very carefully collected. It's not easy. And the way you do a questioning should be very careful, and sworn statement should be there. At the end of it, I have taken sworn statement. Also, we have to, I nowadays record also. So, Mr. Syed, no need for that. Even normally also, director can come and inspect books of account. No need that there is something unethical. Even without that, he can come and see. Please don't put condition. But generally, they will come only when there is a suspicion. Yeah, forensic audit is a kind of investigation. It's a kind of investigation. Absolutely. It is 2 steps above an audit. In audit, we are very, very polite and very, very comfortable. All that. Once you get into forensic, sorry, The velvet gloves are off. Okay. Because they're trying to prevent a fraud. Directors are responsible for true and fair view of the financial statement, etc. Correct. So there. So nobody can say when it will occur, sir. Only when there is a fraud discovered by somebody, we'll have forensic audit. So even the internal audit may result in forensic audit. So anyway, whenever there is some discovery of some fraudulent practices, then forensic audit will come. Usually, large companies only will have forensic audit need, multi-crore companies, because only there it is worthwhile doing fraud. Okay. So nobody can say only for this type of company forensic audit. But by and large, when there is a complicated process and the management hierarchy is very high, where there are 5 levels of management, between the operational management and strategic management, there is three or 4 levels. Those cases, there will be a fraud can occur. Correct. Director is not shareholder representative. Though, as you say, he is appointed by shareholders. See, there could be different groups. So, a director could be a majority director also, or a minority director, or an independent director, or a small shareholders director. So, they have their own allegiances. So, no director will represent all the shareholders, whereas auditor represents all the shareholders. Okay. I have to be very, very balanced. Usually, forensic audit will be initiated by the board of directors. The board of directors of a company will order for the forensic audit. Okay. Usually. Friends, this is not forensic audit topic. That's an ocean of a topic. Later on, when we come to auditing, in auditing, you will study it actually on final. Later on, you can even specialize in becoming a forensic auditor. And our institute has a lot of certification programs on forensic audit. After post-qualification, definitely you can attend that and learn and become a forensic auditor. Okay, now very important, coming back to the topic. Please, no more questions on forensic audit. Come to this topic. So, inspection, where an inspection is made by a director as aforesaid, the officers and other employees of the company shall give to the person making such inspection all assistance in connection with the inspection which the company may reasonably be expected to give, right? Inspection in respect of any subsidiary shall be done only by the person authorized in this behalf by a resolution of the board of directors. Okay. So this is the subsidiary cannot be done by the director of the holding company. Only a person authorized by the board of the holding company can do it on behalf of the holding company. So, director of holding company cannot ask for inspection of books of a subsidiary as a matter of right. No. Okay. Cooperation should be given. When the director is seeking financial information kept outside India, he shall make a specific written request. I have highlighted it also. Written. Written means either a letter or a mail or something. The request for such financial information shall be made by the director himself and not by or through his power of attorney holder or agent or representative. See, these 3 lines, if you remember, you can answer question in the exam. Easily, we see that. Okay, so where you are asking for financial information outside India, it can be done only by the director himself or not by or through his power of attorney holder or agent or representative. Okay. So, whereas if it is in India, you can appoint your auditor or somebody to come and do it and he can demand. But if it's foreign, then the request should be made by the director himself or not by or through his power of attorney holder or agent or representative. Such financial information shall be provided within 15 days of receipt of written request. Okay. Where it's kept outside India. Got it? In this background, take this question. See, it is not a multiple choice question. We will also have MCQs because MCQs are very, very important. But this is an exam question. It has to be written on paper. No selection of choices, but actually write the answer. I'm not reading it for you. Or maybe I'll read it for you. One of the directors of Suryodaya Pharma Limited has sent a request for inspection of the books of account of the company in India. Okay, this is nothing to do with foreign. The CFO of the company refuses to provide access to the said books on the grounds that the director will be provided the quarterly summary of financial position at the board meeting. After all, you're coming for the board meeting, I'm giving you a quarterly summary. What do you want, man? Like that CFO is asking. Maybe a Gen Z. Advise the board of the company as to whether the action taken by the CFO is correct in the right of the relevant provisions of Companies Act 2013. Will your answer be different if the request is made by a shareholder? Yeah. Now that you are aware of the subject, this question is nothing, na? Just like the 3 marks. See, straight away, packet, 3 marks. So easy to score. See, the other day, I told you how to write an answer for law. 4 steps. Represent the facts, write the law, apply the law to the facts. That's 1 paragraph. Application of law to the facts. Conclusion. So what is the question? Advise the board of the company as to whether the action taken by the CFO is correct. Now, this is a 3-mark question. And there is at least 1 mark reserved for that question if the request is made by a shareholder. Therefore, don't write briefly. Okay. Even if you skip the facts, you have to write the law. So you can only see, you just have to write these lines. Yeah, you have to write these lines. This line you have to write. That's all. This you have to write. Then this you have to write. Therefore, the action taken by the CFO is not correct. Or therefore, in the light of sections 128(3) and 4 of the Companies Act 2013, the action taken by the CFO is not correct. In case the request is made by a shareholder, the CFO would be right in refusing, as shareholder stroke member does not have the right to inspect the books of account. If you write this, I don't see why you should not get 3 on 3. If you write anything less than this, you may not get full marks. So, correct. Correct. Kuldeep Nagar also writes very correct. And I don't think this view is taken by the board. I think it's the view taken by the CFO himself. So, correct. Try to be a little elaborate. See, if you are very particular, write whatever is there in my PowerPoint. Try to remember this and try to write. That way you will get your answer. Now, one more question. Aditya Ram is the director of Suntech Infosystems, which has an office in Seattle, USA. He demands certain financial information relating to the Seattle operations over phone. Examine the validity of this request. In case the written request is sent by Mr. Aditya Ram's advocate, should the information be provided? 2 marks. 1 mark each. Let's see what your answer is. MCQs are easy, na? You simply have to put B, A, D like that. No, no, we'll do MCQs. Nearing the end of the session, we will do some MCQs. In fact, once I complete 128, we'll do some MCQs for 128. Correct. Navneet Maurya has hit the nail. Should be in writing and by director himself. So, send back to it is correct. Actually, Tanuji, it is not about whether the director inspects by himself or not. The request should be in writing and the request should be by the director. The request should be in writing and the request should be by the director. He is not going to go and inspect it. He is only going to be given information. Thereafter, he can give it to anybody he wants. But the request should be from the director himself and that too in writing. That's the answer. That is the correct point. Correct. So all of you have hit the points. In person, written request. The request should be made by the director himself and it should be in writing. So, correct. All of you are very correct. Another important point, books of account together with relevant vouchers. Let's see if you have any more answers. Any of you have answers? Yeah, legally request should be in written. Also, it has to be made only by the director. In fact, Mr. Pranav writes, Shanbag writes well. Need more detailed answer. Correct. He can't talk over phone. Instead of writing like that, no, Lingaji, why don't you write differently? A request for information regarding foreign operations has to be made in writing. Therefore, a telephonic request is not valid. The request should be made by the director himself in person. Therefore, through his advocate is not valid. Books of account together with relevant vouchers shall be preserved for a period of not less than 8 financial years immediately preceding. Where a company has been in existence for less than 8 years, the same shall be preserved for all immediately preceding financial years. See, Income Tax Act, you can reopen up to 6 years and even more depending on the nature of the situation. So 14 years and all you can do. So therefore, the provision of Income Tax Act shall also be complied with. Where there's books of account have been, where an assessment has been reopened now, those books have been retained, have to be retained. Till such time the Income Tax Department says you can destroy. So there you cannot quote company law and say, we are having company law, therefore we can do. We can't do that. No. So normally under the Companies Act, 8 years. If there is no reopening, 8th year over, 9th year you can do. Okay. So 8, please remember art, lapan. In, I think in Malaysian, in Chinese also, lapan, 8, lapan, 8. Lucky number in China. Malaysia and all you go, 8, lapan. Okay. So 8 years. In India, 8 is supposed to be unlucky. I don't know why. For me, 8 is luck. In fact, many times vehicle, whenever I register a car, they will ask me, you don't want 8, then you have to pay us money. I said, I want 8. Then recently I said, I want 8. They said, no, that's a lucky number. For that, you have to pay 25,000 rupees. I said, boss, you said 8 is unlucky. Now you give me 8, I'll take it. What others think unlucky, I will take. But they said that also you have to pay. Then give me whatever number you give me. It is a lucky number, yeah. Okay. I make my own luck. Numbers don't make luck for me. So, where a company has been in existence for less than 8 years, what shall I do? The same shall be preserved for all immediately preceding financial years. So, up to 8 years. So, 6-year-old company, 6 years, 7 years, 8 years. 9th year, the first year can be removed. So, it's enough we meant for 8 years. Okay. But normally, see, please remember 8, 8, 8, 8. So, the number that I'm now going to tell is my own selection. I instruct my corporate clients to maintain books of account for 10 years. Safe. 2 buffer years I ask them to keep. Because, see, let us assume that something happens, then I need 1 or 2 more earlier years for reference. Yeah. So for opening balance, comparison. So, therefore, I say maintain for 8 years. I mean, 10 years. So, 11th year, we destroy the books. For some clients, we have a ceremony also. In June or July, we take that old book. Then we go to one place in the premises of the client where the security chief, he will be there. The company secretary also, I asked him to come. Then my representative or me will be there. And director or somebody will be there. CFO or somebody representing the board. And it will be burnt. It will be given dharanam. And it will be photo and a video recorded statement will be told. Such and such a year data has been burned. And a register is maintained where it will be signed off. It will all go. So there's evidence that it was burnt and it's gone. So anybody comes and asks, they say, boss, it was burnt here. No, you have to preserve where it says 8 years under the Companies Act. Income Tax Act, only if it is reopened, I have to maintain. Nothing is reopened. How you want to come and ask me? Reasonable time you ask, I'll give you. You can't keep on asking for 200 years. Okay. And historical record, you can't do. Excavation, I can't do. Okay. Right. So this is preservation of the Singapore. Penalty for contravention of section 128. Earlier there was imprisonment. Now they have decriminalized, as you know, 2020 decriminalized. They have removed imprisonment. See, after all, what is there? Yeah, have I killed somebody? Yeah, have I committed murder? Just not maintain books of account, double entry system, accrual basis. Come on, intellectual crimes. Not intentionally. And it could be unintentional also. You put a guy in prison for that. Of course, fine him. See, any violation of 128, my dear friends, including non-maintenance of accrual, anything, not maintaining double entry system, whatever violation of 128, who is responsible? Not all the directors, only MD, whole-time director in charge of finance, CFO, duly appointed by the board, any other person charged by the duty of complying with provisions of section 108. So there is a head accounts charged by the board. There should be a board resolution charging him with the duty of complying with. Then that person also liable. Okay. So these 4 persons are liable for penalty 50,000 to rupees 5 lakhs. Right. So steep penalty. So before we go to 129 financial statement, let me sort of go for some multiple choice questions, right? Shall we? Before that, any queries? Thank you, sir. Nice. Thank you, madam. 8 is lucky. Not lucky. For all, 8 is a good number. See, Om Namo Narayanaya. Om Namo Narayanaya. 8 akshara. 8 syllables. Om Namo Narayanaya. That is why it's called Ashtakshari. Ashtakshari, 8. So 8, how it cannot be lucky? It is the name of the Lord. It is lucky. Okay, 8 cannot be unlucky. This is Ashtakshara. Just like Shiva's name, Om Namah Shivaya. Panchaksharam, this is Ashtaksharam. Cannot be unlucky. Anyway, these are all comments given casually. Don't take otherwise. See, this burning is my idea. Don't take it. You don't want to burn, don't burn. Keep it safely. Space constraint, yeah. How many years I can give? Boss, we are talking about vouchers, papers, blah, blah, blah. But what nowadays we do is, most of it is electronic form. So we scan it and we keep one image. But paper, we burn it off. And off late, we stop generating so much paper. Much of it is in electronic form. Electronic form. See, even electronic form retention is not easy, Baba. You have to keep it. It should not get corrupted. So, my responsibility over 8 years. Safe side, I'm having 10. Beyond that, burn it. Burning is my idea. No law. No law. Okay? Only my law. I burn it. Burning saves space. Okay. So, let's go for MCQ, because instead of keeping it till the fag end, let me. Then we'll come back to 129, right? So, to the extent covered, we will go through. Okay? Straight away, we come to the point. See, that's what I'm very worried, because I told 10 years also, some of you is going to get confused now. Don't get confused. Law is very clear. For the law, it's only C. Thank you. None of you is confused. All of you are very clear. As per law, it is 8 years. The correct answer is, as rightly pointed out by all of you, it is 1 year. No, madam, 8 years. One C is correct. Tanuji, 1C. Maybe you got it wrong. Sorry. Yeah. You corrected yourself. Good. Good job. Okay. So the correct answer is 8. Good. I mean, sorry, these are all very, very obvious questions, but the idea is not to test you, but to reinforce, so that it will get reinforced one more time. Beautiful. 2, 2, 2, 2, 2, 2, 2, 2, 2. B. 2B. Correct. 2B. Beautiful. Those of you are giving it, B, sir. Correct, sir. B, sir. Absolutely correct. B, sir. See, there is a form called AOC 5. That is a form for filing. Form AOC 5. What is AOC? Account of company. Nothing, no great thing here. AOC. All the forms in this chapter will be AOC, because this chapter is called Accounts of Company, like that. Therefore, AOC. AOC 5. Okay. Correct. All of you are right. B, 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 B. 3B. Prerna ji, 3B. 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 Prerna ji, you might want to relook at your answer. Why? Because company, see, in the first instance, books of account should be kept at registered office. But if the board wants, it can have it in a place other than the registered office, provided the board passes a resolution and informs the ROC within 7 days in AOC 5. You can make a note of AOC 5 also, which is the requisite form. Okay. So the correct answer is B. Any place in India, wherever you. That's why I gave you an example now. Madhya Pradesh, Mumbai office. You can. What I gave you is a typical case study. I've seen many companies do this. Do you remember? 1st April? I'm not letting out the answer. I just said 1st April. Can be 2018, 20, 23, 25, maybe from now. Just testing your retention. Yeah, that's all. Nothing more than that. Actually, 23, even 23, they found it very difficult. But finally, they put their foot down and said no. And many software were not ready with the provision. So they went and begged so on and so forth. Ria G is thinking D. No. C, 23. 23 is the correct answer. Right? Please. No, sir, I don't speak Hindi, sir. Let's not go into Hindi, ma, please. Let's not go there, ma. Let's not go there, ma. Things are going nicely. Let's go on with our life. Let's not go there, ma. Don't go there. Don't go there. Don't go into that dangerous area. मुझे हिंदी नहीं मालूम. But I try to learn, but not too good. Try to learn. I travel all over the country, right from Jammu in the north, to Mokokchung in the east, Nagaland, to Vaga in the west. Of course, Kanyakumari in the south, I have traveled. I'm an Indian and I speak English. Yeah, my convenience here. It's not like that. I'm supposed to speak only in English. This particular course is supposed to be taught in English. Okay. And occasionally allow me to speak in Hindi also. In the sense, one or two words wrongly I speak, don't correct me. Idea is to relate to those of you who come from the northern part, the Bihar, Madhya Pradesh, Uttar Pradesh, parts of Gujarat, Maharashtra belt. I want to connect with you. There's a lot of students in that area. I love them. Who is responsible for compliance of Section 128? A, auditor. B, shareholders. C, MD, WTD, finance, CFO, other person charged by board. B, good job, company secretary. E, God. No, there's no E, God. Finally, God only has to maintain this. Yeah. Definitely. And they would love that auditor should be responsible. They would love. Amongst all my crimes, they will include this also. Non-maintenance of books of account also, they will try to push on me. Raul, I'm guilty of so many crimes. Why not add one more crime to this fellow? You are an auditor, man. Chartered accountant in practice, auditor. You are guilty until proved innocent. Luckily for me, this is one offense I cannot be guilty of. I only audit the accounts. I'm not supposed, in fact, that role should never be confused. The person maintaining the account should never be the person auditing it. In fact, when you come to auditors, you will learn. The same firm should not also maintain the accounts for the company. So the answer is very obvious. Am I correct? C is the correct answer. I've been to Visakhapatnam many times. Yesterday I was in Vijayawada. Day before yesterday I was in Vijayawada. I was conducting orientation program there, and just chilling in near our chapter is there in Governor. There nearby I stay and I just enjoy Vijayawada. Visakhapatnam many times I've gone. Many times. I'm a visiting faculty for Geetham. So, but I don't know Telugu boss. What to do? Language need not restrict my travels. I go wherever I go. I pick up some Telugu, local Telugu, and I speak some nonsense Telugu, and I go. I buy guava from the shop. I speak some Telugu. Whether they understood or not, I will speak. When I go to Kerala, I speak some stupid Malayalam. When I go to Karnataka, some Kerala, whatever comes to my mouth is Kannada. They understand. The shopkeeper understands. I understand. We are happy. The hotel server understands. I'm happy. So what more do I know? The auto wala understands. And of course, a certain degree of Hindi is very useful across. Beyond Vijayawada, so aage chalo, piche chalo, like aas-paas hai. Okay, all that I know. Okay. Hey, sorry for this. No? Let's not get into this language thing. It's the most stupidest thing in this country. Don't go there at all. Let's go beyond language. Let heart to heart speak. Languages are not needed. When the heart speaks to the heart, language is not needed. Okay. It's only when the mind speaks that language is needed. When the heart speaks, no need for language. I spent some time in Gaya in Bihar, where one Bihari boy and I became very good friends. He was speaking in Hindi and Bihari. I understood something and I explained in English. He understood something. He explained Bihari poetry to me in Hindi, which I understood. But I couldn't speak, but I understood. Sorry, this is not covered yet. We'll move on. So as of now, how many PowerPoint, how many MCQs did I cover? 5. I've covered 5 MCQs. By the end of the session, we will cover more. So, good show, yeah. Good show. Good show. Correct. Mother tongue is always comfortable. It's always there. Anybody can guess my mother tongue? Okay. Now we'll go back to where we left off, which is yeah, all of you got it correctly. Because I mentioned about Tamil being one of the classical languages, no? Thank you, Harshji. Thank you. Sanskrit is not a mother tongue, yeah. It's nobody's mother tongue. all of us have a different mother. What is mother tongue? You really look at philology, no language is original except, see, even Tamil they say is original, but basically there was one Tamil. That Tamil, there was one language which is the mother of all the southern languages. Yeah, of that, the earliest fellow who came out was Tamil. From that original Dravidian language, the earliest to come out was Tamil. The rest of them came a little later. Telugu came a little later. And the other 3 fellows allowed Sanskritization, whereas we fought Sanskritization and we retained the grammar and the vocabulary very, very puristically. We maintained it as Tamil. So that's why Sanskritization did not happen. Well, the other 3 languages allowed Sanskritization to happen. That's one reason why they sound different from Tamil, but they all have a common mother. All the southern languages have a common mother. No one language is the mother of the others. Yeah. To claim that Tamil is the mother of the other languages is not fair. Tamil is one of the sister language. You can say sister, sort of sister. Very, very, very distant sister language. Okay, so coming to the next section, definition of financial statement, you have already studied to subsection 40. But still, since it has relevance here, we'll quickly go through it. There is a whole bunch of things that go into this one concept called financial statement. Okay. From an auditing perspective, this is very, very important because when an auditor audits now, we audit the entire financial statement, though we certify the balance sheet, true and fair, P&L, true and fair. We certify the balance sheet and P&L, but not just that, everything in it. Balance sheet, P&L, and income and expenditure in case of non-profit organizations, cash flow statement, statement of changes of equity during the year, whether the equity has gone up, gone down, why, buyback, fresh issue, rights issue, whatever. Any explanatory notes annexed to or forming part of the financial statement. Friends, you will see two words being used. So it will be good if you can, at this stage, distinguish between these two words. The word annex and the word attach. You will also see the word attach coming a little later, but right now let me deal with them here. What do you mean by the word attach? What do you mean by the word annex? See, let's see if I have example here itself, which I can show you. I think I had somewhere. Okay, no problem. Now, see, if you can understand this, it will be good because I don't have the actual stuff on my table. Normally, I'll have it with me. Surprised. Okay, so yeah, I have it. Now, my dear friends, attach. Can you see this? This is called a clip. It's a clip, gem clip. So I take this paper and I take this paper and I take and put them together and I put this clip. Whenever I want, I can pull it out. So in a way, I'm only attaching them. That means what? Whenever I want, I can take it out. Got it? Now, this particular set of papers, suppose I want to be sure that they will not get out, that they will not be torn away. What do I do? Can you see this? This is called a stapler. I staple them together. Now they are annexed. Are you able to see the difference? So the balance sheet is the main document. The P&L is annexed. The cash flow statement annexed. Statement of changes in equity annexed. Explanatory notes annexed. So all that together stapled becomes the financial statement. To that, the audit report is attached. To that, the audit report is attached by the gem clip. The director's report is attached. Okay, so the next means it becomes part and parcel. Attached means it is only kept together. I want you to just wrap your brains around this. So whenever you see the word annexed, be careful. That document is part and parcel. Attached, only kept together for convenience purposes. So in the annual report, what happens is the director's report is attached. The auditor's report is attached to the balance sheet. So the balance sheet is the core document. The P&L is annexed. The cash flow is annexed, etc., etc. Notes are annexed. Now you might ask me, sir, okay, sir, I got the point. What is the significance? I will tell you. You are the auditor. You're going to sign the balance sheet. When you sign the balance sheet, you are taking responsibility for every document which is annexed to it. You're not simply signing the balance sheet. You are signing the balance sheet and every document or thing which is annexed to it. Which means that when you certify the balance sheet, you are certifying the whole lot of stuff. Together called financial statement. Any other document which is annexed also will be bound. You are bound. Your audit report will extend it to every document annexed to the audit report, but not attached. So your audit report is attached. The audit report pertains to the balance sheet, but not just the balance sheet, but everything which is annexed to the balance sheet, which means your audit report does not extend to the board of directors report. Directors report is not my area. I am not certifying. What those fellows are saying there, they are saying, you got a problem with that, go catch them. I have nothing to do with it. Balance sheet mein P&L, cash flow, statement of changes, notes. I certify. They also sign, I also sign. They are also responsible. Please don't think that I'm private. Once I have signed, I'm also responsible. If there is any misstatement, if there is anything wrong, I am also liable. Friends, I keep on using the word very, very carefully. I'm not saying I'm not liable. I'm saying I'm also liable. Because he's also primarily liable. He's the owner of that. I merely certified it. So I'm also, once I certify, I take over, but it's not as if he passes on the liability to me. I share the liability with him. That's all. The directors are also primarily liable because if the audit, the balance sheet is not giving true and fair view, whose liable, whose responsibility? Director's responsibility to ensure that it gives true and fair view. Certain companies are exempted from annexing the cash flow statement. Certain companies are exempted from enclosing or annexing the cash flow statement. For example, one-person company. You already saw that. I think I only taught you. OPC, one-person company. Small company. Maybe in definition you saw. Small company. Dormant company. Okay, later on you'll see it. A company that is not functioning, but not dissolved also. It is kept in dormancy. Dormant means to sleep. So it's sleeping company. It's like sleeping beauty. We put it to sleep. Then when the prince comes and kisses it, it again comes to life. You can always revive a dormant company. But during the dormancy, it need not file cash flow statement. And during dormancy, there won't be any transactions. It will be just lying. Okay. So they say no need for any cash flow statements. And lastly, private startup company. Private smart startup company. Okay. Should be a startup company and a private startup company. So one-person company, small company, dormant company, and a private startup company. 4 types need not include cash flows. Right? Remember this so that it is right. Okay. So this is for the purpose of this section, except where the context otherwise requires, any reference to the financial statement shall include any notes annexed to or forming part of such financial statement. So annexed to means forming part. Attached means kept together. That's all. Not forming part, kept together. Okay. So I'm giving you a lot of stuff together attached. But in one particular bunch, everything is stapled. That is annexed. They form. So financial statement is one bunch I'm giving you. Audit report is one bunch. Director's report is another bunch. Together they are attached and given. The financial statement, balance sheet, and every document which is annexed to. Okay. Mainly notes. Notes form part and parcel of the financial statement. If I have not already told you to do this, I once again humbly beg you to take up the financial statement of listed companies. Take simpler statements like Marico, Dabur, FMCGs, Dabur, Ashok Leyland, Tata Motors, fantastic balance sheets. Go through them. Go through them systematically, not with any exam purpose in mind. Yeah. Open mind, you read. Just absorb what is there. Suddenly you will find these become examples for you when you are studying any topic in your syllabus. After all, that is your thing. So read. If you don't understand a word, look it up in Perplexity or look it up in ChatGPT or look it up in AI, Google Gemini. After all, they are all readily available to you. Okay. So we are using ChatGPT for so many things. Why can't we use it for looking up tough words in English? Nothing wrong. If you want to use it. If we are eager to become knowledgeable, we will. Okay. So That's what I said. The financial statement should give true and fair view of the state of affairs of the company or companies. Whose responsibility? Director's responsibility. They have to ensure that it gives true and fair view. The auditor only verifies and certifies that it gives true and fair view. In the first place, it is primary responsibilities with the directors. That's why I said I share the responsibility. Okay. Should be in the form provided in Schedule 3. Okay. You know that. Schedule 3 is the format for the balance sheet and P&L. You know that very well. Financial statements of every financial year shall be laid before the company at every AGM by the board. So one of the important matters which will be done at the AGM is the approval of the financial statement, which is one of, just like declaration of dividend is an ordinary business. Similarly, adoption of the financial statement, the balance sheet and P&L account, is a ordinary business, one of the 4 ordinary businesses. So every year, the financial statement should be laid before the company. The word laid before means presented to. Don't think that it will be laid before them like some, before a god or something like that. Not like that. It means presented to the company at only the AGM. See, the accounts are adopted at the AGM. That's why it's an ordinary business if done at an AGM. But if it's done at some other meeting, it's a special business. You have to give explanatory statement. If you already studied management and administration, you will understand what is an ordinary business, what is special. Not rocket science, yeah. These 4 matters which I mentioned, I already given you 2. The other 2 are appointment of a person other than the retiring auditor, removal of a director. Okay. These 4 will be, appointment of an auditor in the place of those retiring and appointment of a director in the place of those retiring by rotation. These 4 matters at an AGM ordinary. Everything else is special. Okay. Everything else is special. Anything else at an AGM and everything at every other meeting or anything at any other meeting is a special business. So this is a special business matter. Now, financial year, in case you already know it, I'm very happy for you. But if you don't know it, then quickly we will see what it is. Financial year means the period ending on the 31st day of March every year. Where a company is incorporated on or after the first day of January of a year, financial year is the period ending on 31st day of March of the following year. So, first of all, financial year is a uniform period. It begins on the 1st of April and ends on the 31st day of March. But in case the company is incorporated on or after the first day of January, then financial year is the period ending on 31st day of March of the following year. Simple, sir. If it is on 1st of April, we have no problem. Obviously, the next year will be 31st March. But suppose it's in between 1st January to 31st March. Then, see, suppose the company got incorporated on 28th March. You cannot say, here it's on 31st March, 2 days I will prepare accounts. No need. Straight away, you go to next March. So, company incorporated on 5th February 2025. First annual general first financial year will end on 31st March 2026. Got it? Whereas 1st April, no problem, 31st March only. Are you able to understand? 30th September, 31st March only. It will be part less than 1 year. Nothing can be done about it. Okay. 31st December also, 31st March only. 1st January, straight away it will go to the next March. Okay. So after the first day of January, on or after. In case of a company or body corporate, which is a holding company or subsidiary company or associate company of a company incorporated outside India and is required to follow a different financial year for consolidation of its accounts outside India, CG may allow any period as financial year, even if that period is not a year, provided it is a subsidiary or a holding company of a company incorporated outside India. And so they might say for you the financial year, but only for those companies which have foreign subsidiary or foreign holding, a different financial year can be. Because many companies incorporated in US will follow July to June, 1/7 to 36. England, 1/1 to 31/12. In fact, our enlightened Prime Minister is of the view that our financial year also should be changed to 1st January to 31st December. 1st January to 31st December. Some measures were taken for that, but as of now, that seems to be in the back burner for him. I'm sure when there is some other crisis, immediately we will come back and we will go for change of financial year, which would occupy all of us in WhatsApp and things so that the crisis will be forgotten. So it's a beautiful opportunity. So waiting, suddenly you will find the financial year will be changed, and that will create so much awareness. NDTV, News 18, everybody will be having talk after talk. Should the financial year be changed? Why should it be changed? There will be a whole lot of people supporting, thus opposing, fighting, non-issue. What is really the financial year? Whereas the issue, which is really the issue, will simply be taken care of. Okay. Now the point here is so we await it. When it comes, it will come. Don't worry. There was the reason given for changing from 1st April to March to 1st January to December is most countries, the so-called superpowers, they are all having 1st January to 30th December. So India alone, rightly or wrongly, we selected 1st April to 31st March. Why we did that, God only knows. Why at that time itself we did not follow the British 1/1/2 calendar year, we do not know. But at that time, we rightly or wrongly, we preferred to go for 1st April, which is April Fool's Day, starting the financial year on 1st April and ending on 31st March. We decided rightly or wrongly. Okay, I'm not questioning the wisdom of anybody here. So by changing the financial year, we will become a superpower. That is the hope. Because the financial year of superpowers and all is not 1/4 to 31/3. So by changing the financial year, we become a superpower. Okay, let us see. I don't know. For me, it matters nothing. Yeah, that 1 year there will be a lot of confusion. We'll all have seminars and symposia, and then it will cool down, and we'll get used to 1st January to that one. We'll go on with our life. So whatever it is, as of today, it is 1st April to 31st March. Any company which is incorporated on or after 1st January, the first financial year will be ending on the 31st day of March of the following year. Okay. So this example could help you to understand it better. Santosh Das keeps on putting great sir, great sir. I thank him for his great sir. Salam. Some of you have answered. Some huge questions are there. Let us see what they are. Annexed, yeah. Annexed means placed, or annexed means irretrievably connected. They cannot be removed. Agreed. But however you want to understand it, understand it. Next means it cannot be removed. It becomes part and parcel. Attached means kept together. That's all. Okay. No, no. Correct. Stapling together is annexed. It cannot be separated. Yes, definitely. AGM can be held only after the balance sheet is finalized, audit is finalized and all. Correct. 2K notes, demonetization. After some time, you will get used to it. Okay. Some of you are giving me answers for Abhiruchi. See, Abhiruchi Limited was incorporated on 11th December 2023. When should the company hold its AGM? 11th December 2023. Okay, I'll do one thing. For the sake of relevance, I will change it. I will change it to 2024 so that you will have some, according to section 97, etc., the company's financial year will close on 31st March 2025. Kyun? Because December, na, the company may hold its first AGM by 31st December 2024. That you know already from your management and administration. Would your answer be different if you are informed that the company, I'm changing the dates for the sake of, relevance. Because, see, some people, what, sir, you are old, 23 old, sir, 24, latest. Give me latest. Correct, latest. What's the big deal? The law is the same. Law has not changed. Year does not change. Law has not changed. Yeah, let's see. See, first you understand one thing. 11th December 2024. When should the company hold its AGM? So, in a way, we are combining knowledge of two topics. This topic and management administration, which you studied. So, the first AGM can be held within 9 months of the date of close of the financial year. So, what is the date of closure of financial year? Company incorporated on or after 1st January, the next 31st March, you have to hold. This rule will apply now. Where a company is incorporated on or after 1st day of January, the financial year is the period ending on 31st day of the following year. So here, no problem. It was incorporated on 11th December. So the first financial year will end on 31st March 2025. Correct? 2025. The company may hold its first AGM by 31st December 2025. First AGM. After that, 6 months. For the subsequent AGMs, should be held within 6 months in the date of close of the financial year. Whereas first AGM will be held on 31st December 2025. Okay? See, some of you who might have got my earlier PPT, this will be different. It's okay. Rule is the same. Okay. Now, will your answer be the same if you are informed that the company was incorporated on 11th February 2025? Or will it change? Let's see who has given me any answers. Correct. 11th February, AGM 31st December 26th. Because if it is 11th February, then the year will close on the 31st of March of the following year. So the following year is 2026. 11th February 25, na? Therefore, 31st March 26. From 9 months from that date. So you should hold it on or before 31st December 2026. 2026. Those of you who gave 2025, please review your answer. Because, see, when a company is incorporated, on or after the first day of January, financial year is the period ending on 31st day of March of the following year. Note it, your honors, following year. So if it is incorporated on 11th February 2025, the first financial year will end on the 31st of March of the following year. Agreed? Solve, which means next year, which means what? 11th February means 31st March 2026. From that day, within 9 months, you have to hold it. That means 31st of December 2026. Have you understood? Yeah. All of you clear? I hope everybody is clear. Good, sir. Good, sir. Good, sir. Good, sir. Thank you, sir. Okay, that's all. Now, so the financial statement should be in accordance with the accounting standards. Okay, except for government company, AS 17 will not apply because especially when you are engaged in defense production. So your classification should not be known. Segment should not be known. Compliance in accounting standard is also compulsory. Whose responsibility? Directors. Auditor, no. I am only here to find out whether you are complying with accounting standard. Basic compliance with accounting standard. That financial statement given to me for audit should be in compliance with accounting standard. Not my responsibility. Okay. Responsibility of the board. See, one more thing. Being a practicing chartered accountant with 40 years experience, I keep on saying me, my, etc. Don't get other upset. Huh? So as a practicing CA, I become involved in this. So that's why I'm making the comment. It's not my responsibility. It is the board of directors. Okay. Because I've never worked in a company. Right from day one, I joined Pricewaterhouse for 3 years. I worked as an audit manager there too. There also, I was not in a company. I was in Pricewaterhouse. I was an audit manager. Then quit, started my own practice. Never worked in any company. I don't know how to work. I'm a absolutely unemployable fellow. I've always been on my own. So whenever the financial statement comes to me, it should be in accordance with accounting standard. That is their responsibility. If it is not, then I will inform. That is my responsibility. In case of non-compliance, if you know that you are not complying, then the director itself should disclose the deviation. What is the deviation? What does the standard say? And how you are deviating? Why? The reason for such deviation. Okay. And more importantly, the financial effect of such deviation. You have some reasons for deviating, or most of the time there won't be any deviation, boss. It will be more of interpretation. They will say this is what it means. The auditor will say this is what it means. And finally, the auditor will say it's a deviation. And he'll say, I'm going to qualify. Then automatically they have to say that this is what it is. This is the reason you're doing, and this is the effect. Okay. So this has to be done in the board's report. The disclosure of this should be done in the report of the board of directors. The board's report is a very powerful document. See, certain types of companies, now, they have special laws. For example, insurance company has special rules on how financial statements should be prepared. IRDA. Banking company, Banking Regulation Act. So it is not necessarily for them to comply with 129(1). Instead, they can comply with their law. Electricity company, they can comply with Electricity Act. Any other law, they can go by that law. Okay. Just, for the sake of interest, I'm going to show you something. Just as a matter of interest. It's just more for you to know. So some of you may be even asking now. Some of you may be even asking now. How is it possible, sir? How they will have? So here is IRDA. This is the IRDA regulation. See, this is the IRDA regulation. This is called the Insurance Regulatory and Development Authority. Okay. So the IRDA has issued IRDA Preparation of Financial Statements and Auditors Report regulations. So insurance companies have to comply with this regulation. Have you got it? They are not bound to comply with 129(1). So this regulation is comprehensive, everything, including applicability of accounting standards. So there they will say certain accounting will not apply, certain will apply, all that they'll give specific exemptions. Going by that, you go. So if you're auditing an insurance company, you have to be very, very careful. You have to see whether these are complied with, so on and so forth. In fact, this statement is very comprehensive. See, it also gives the format. What all formats? Everything is given here. Okay. So P&L account format is given here. Balance sheet format is given here. Everything is given here. You have to comply with it. That's all. Okay. Specialized accounts. So here I just wanted to show you. This is not part of syllabus. Just want to show you how the specialized companies, one type of banking regulation, there's a separate rules are there. Accounts rules are there. Provisioning norms are there. So many things are there. So if you're auditing a banking company, we have to comply with that. Okay. Friends, I've been talking for a long time, and more importantly, you have been listening for a long time. So let's have a small break and then we'll start again. No, no, not in your syllabus, not in your syllabus. No, no, no. Just for sake of knowledge, I'm showing that, sir. Just to show you. It's not in your syllabus. No. Maybe later on in final, when you come in financial reporting, you might have one chapter on insurance accounts. Not here. But just to show you. Hmm? So let's have a small break. Sir, small break, sir. G, small break. Okay. I will anyway take the break and I will come back in 5 minutes. Sir, break. Thank you, sir. Thank you, G. Thank you, G. Thank you, G. Welcome back from that smiled break and moving on. Consolidation of financial statements. I think this is a very interesting and important area. Consolidation, also abbreviated as CFS, consolidation. See, the shareholders of the holding company are entitled to see the total picture. See, the holding company has invested in the subsidiary. Now, I am the shareholder of the holding company. So the holding company gives me a sort of a standalone balance sheet P&L financial statement. Standalone financial statement, wherein the investment in subsidiary will be shown under non-current investments. I'm happy, but it's still what I want to see. Suppose that company both are together, how does it look? So that is called consolidated financial statement. Not only for subsidiary, but also for associated enterprises. I'm sure your researchers into accounting standards would have by now shown you about all these accounting standard 21, all that, about the rules for consolidation. Basically, we identify the third party interest in it, the minority interest or whatever it is. We segregate it and show it as a liability. The remaining, we bring all the assets into our books, all the liabilities, and we take it as ours. For the sake of consolidation, the separate entityship of the subsidiary is ignored. The separate entity nature, na, that alag alag hai na, holding alag hai, subsidiary alag hai na, separate entity hai na, is still for consolidation, we convey. We make them one. And legally they are separate, but still we show together. We give one picture, everything. So the third party shareholders there, they will be shown as liability, outside liability, group as a whole. Not only for subsidiary, but also associated enterprises, where we have 20% or above. There also same logic, except that I don't have a controlling interest. So the remaining fellows will be shown as liability. My 20% will be. So which means at the end of this exercise, my investment cannot appear in the consolidated accounts. That will be written out. That will be taken out. To the extent of the value of these assets that are coming to the balance sheet. Now, to the extent of the profitability of the subsidiary, that investment will be going up or down. So capital reserve or goodwill will have to be operated, and that loss has to be written on for whatever it is. Okay. So don't worry about the accounting part. Here only legal part. Consolidation 129 subsection 3. Compulsory. Every holding company should consolidate financial statements with its subsidiary. Okay. It should be done in accordance with the provisions of Schedule 3 and the applicable accounting standard, which is Accounting Standard 21. Central government may provide for the consolidation of companies in such manner as may be prescribed under Rule 6 of the Companies Accounts. Not necessarily for you to know. Broadly, if you know, it is enough. A company having one or more subsidiaries shall lay a consolidated financial statement along with standalone. So all the subsidiaries will be merged into this and thing. So there will be two sets. One CFS, consolidated financial statement, and one standalone. Okay. So when you're seeing Ashok Leyland Limited, first you see the standalone. Don't get confused with CFS. Then go to the CFS. They'll have a CFS also, consolidated financial, with all their subsidiaries. They'll be having a lot of subsidiaries. All that will get merged. You'll have a separate. Check it out. So the statement containing the salient feature of the financial statement of a company's financial subsidiary or subsidiaries also should be given. Form number AOC 1. So this is just the salient features of the financial statement. In addition to consolidation, you should also provide the salient features. Okay. So consolidation is compulsory. In addition to that, in Form AOC 1, you have to give a statement containing the salient features of the financial statement of a company's subsidiary or subsidiaries, associate company, joint venture. For everything separately, you have to give AOC. So all the provisions applicable to preparation, adoption, and audit of financial statements shall apply mutatis mutandis with such changes. Mutatis mutandis means with the suitable changes, with applicable changes, will apply to the CFS also. So the auditor of the holding company, two jobs: audit the standalone and audit the CFS. So for the purpose of CFS, you are allowed to restate the balance sheet of the subsidiary. Normally, the auditor of the holding company cannot audit the subsidiary. But for CFS, whoever signing can redraft for the purpose of. Also, if they are not compliant with some auditing standard or India is, you can redraft the account so as to make it compliant. And then consolidate. Only for your concern, because you are certifying now. So you might find. This is something you might want to wrap your minds around. I will go through it slowly. Try to understand. If not, I will explain again. See, is it possible for any subsidiary or holding company to be exempted from preparation of CFS? Whether any holding company can be exempted. They give one example, 3 conditions are to be satisfied. First provision to Rule 6, very important. They have asked once or twice in the exam. Members, including those not otherwise entitled to vote, do not object to the company. Those not otherwise entitled means there could be differential voting right shares, wherein no vote is possible, but dividend is, they are entitled to dividend at 5% above the normal rate, but no voting rights. Even they should not object to the company not presenting CFS. Even though they don't have a voting right, they should not object. So no member should object, whether having voting right or not. There could be members who are having differential voting right shares, not devious shares. Maybe they don't have, they have 0 vote. Possible. 0 vote. 5% dividend. Sir, if Mr. Mukesh Ambani says, Srikanth, I give you shares, no voting rights, dividend will be there. Otherwise, same as my other equity shares. Are you okay? He'll say, Saab, thank you very much, Saab. I'll take it and go. Take it and run away. Why? Because I'm getting Reliance shares, yeah. Got it? So, because voting right, what I will do with it? Thank you. Okay, like that. 5% more dividend. Thank you, sir. Bye. I mean, I'm just saying, not all companies can get away with it. Suppose Mr. Narayanamurthy says, Infosys share, no voting rights, 10% more dividend than others. Thank you, sir. Give it. Okay. Because what will I do with voting right? Yeah. It's a trust of that company that's more important. But same, suppose Mr. MD of Dubakur Limited says, Srikanth, no voting rights. Dividend, I'll give you 25% more than normal. Sir, sorry, sir. Please excuse me, I don't want it. Because, no, why you're taking from Ambani, you're taking from Narayanamurthy. Sir, you are not Ambani, you are not Narayanamurthy, you are Dubakur Limited. For you, no. Unfortunately, in a booming market, people don't know the difference between Ambani, Reliance Industries and Dubakur Limited. That is the problem. They will believe everybody are equal. Everybody is equal. It doesn't happen. Anyway, coming to the point. So the members do not object. It is a company whose securities are not listed or are not in the process of listing on any stock exchange, whether in or outside India. So first condition, no member should object, whether having voting rights or not. Second condition, company should not be listed or should not be in the process of listing. Third condition, very important, its ultimate or any intermediary holding company files CFS with registrar, which are in compliance with applicable. So ultimate or any intermediate holding company files consolidated financial statement. I can give you only one example because, as you know, more than 2 layers of subsidiary not permitted in India. So A can have a subsidiary B, B can have a subsidiary C. Now, A has to consolidate with B. B will consolidate with C normally. So A has to present a standalone statement and a CFS wherein B with C rolled into it will be consolidated. B with C rolled into it. This is called chain holding. You heard of it now? Chain holding, where first you have to consolidate, push C into B, then B into A. Then that will become A's consolidated financial. So normally B also should present both standalone and CFS. That is B separate and B consolidated with C. But if you apply this rule proviso, you may exempt B, provided no member of B is objecting. First condition. Second, B is not a listed company or in the process of being listed. And third condition satisfied now. Its ultimate holding company, that is A, is filing consolidated financial statement, which is in accountant's plan. Therefore, B can be exempted. B can be exempted. B can be exempted. Have you understood? Three conditions. A, B, C. A cannot because A has no ultimate holding company. C, there is no point because C is not going to consolidate anyway. There is no subsidiary. Only B will satisfy. B, no member should object, whether having voting right or not. B should not be listed or in the process of being listed. And A, the ultimate holding company of B, is filing consolidated financial statement. If three conditions satisfied, B need not consolidate financial statement with C. It is enough if C is consolidated into B and together they are consolidated in A and take. B is exempt. Have you understood? Any doubt? Sir, always the jurisdictional ROC, sir. ROC who is having jurisdiction over the registered officer. Mr. Navneet, always the ROC is the man having. So here our registered office is in Indore, na Madhya Pradesh ka ROC. What MCQ? Yeah, I have some MCQs. The last one only you would not have understood, na? I know. See, B ka ultimate holding company is A, na? Ultimate means it's topmost A. See, B ka ultimate is A, na? A is consolidating, na? A is presenting consolidated financial statement. Therefore, B need not present, provided the other two conditions are satisfied. Got it? Ultimate means its holding company or any intermediate holding company like that case. Intermediate means in between somebody. Suppose C had a subsidiary. Now C need not consolidate, provided B, that is intermediate, or A, the ultimate holding company is consolidating. You got it? But C cannot have a subsidiary in India because we have to restrict to 2 layers. Below 2 layers, you cannot go. But suppose one of the exemptions, is there. Under that exemption, you are having a C has a subsidiary. Then C need not consolidate with that D, one more subsidiary D, provided either B or A is consolidating. Either it's intermediate or ultimate. For B, it's enough if A is consolidating. Because for B, A is the ultimate holding company. To the best of my ability, I have explained this. Correct. Don't say parent company. Don't say parent company because, see, in this example of C, C may have a subsidiary D. Now, C need not consolidate with D if the parent company B or its ultimate holding company A, okay, one of them consolidates. Okay. So that is how it is. A and C, no sir, no madam, no madam, no madam. A and B has to be consolidated. C will be consolidated to B. Then B will be consolidated to A. A will present CFS. B need not present CFS along with C. That's all. A will have to give its consolidated financial statement wherein B will be consolidated. B would already have had C consolidated. You have to consolidate C into B. But that consolidated B will be consolidated into A. A will present CFS. If so, then B need not present CFS. Okay. That's what it means. Now B has acquired 51% share capital. B will have 3 further subsidiaries. C has 2 subsidiaries. B has acquired 51% of share capital. Okay. I'm not able to understand, ma. Relation among A, B, C. A is the holding company of B. B is the holding company of C. The arrow marks are there, na? A is the holding company of B. B is the holding company of C. C is the ultimate subsidiary. A is the ultimate holding company. Okay. So again to repeat, C will have to be consolidated into B. That consolidated B will be consolidated with A. So A will have the master CFS, course, the consolidated financial statement. That will be presented by A. Because A is presenting, B need not present its CFS, which show along with C, that need not be presented by P to its shareholders. That's all. Okay. Got it. I explained why B not liable for self-assessment. Got it, Mr. Praveen? Pranav? Because B, provided B satisfies all these 3 conditions. No member is objecting, not listed or process of listing, and then B has an ultimate holding company A. That company is consolidating and filing. Therefore, B need not. I think I've explained it very, very carefully, very, very clearly. You have to confirm that you have understood, yeah. You have to confirm that you have understood, yeah. Please, begging you. If you still don't understand what I can do, yeah. And this, thank you, ma. Thank you. Because, yeah, I would like that you everybody should understand that is well. Okay. Or else what you do now, this PowerPoint has been sent to you. Again, go through it once more and see. Also, this video can be seen from, just go to the ICAI BOS YouTube. You can download it and you can see it. Let us see if I have any MCQs that I can quickly take it up with you. So that we can have another 3 more MCQs, minimum 8. So minimum 8. Financial statements must give you. Why not true and correct? Yeah, that I won't answer. That is what the auditing professor answer. Not for me. I will not certify true and correct. Never. Am I God? A is the correct answer, as all of you would have told. See, yeah. See. True and fair view, sir. Only, see, whenever you see the word only, be very, very careful. Only means be careful. Yeah, because the materiality concept, more importantly, friends, depreciation is an estimating I am. Stock valuation is an estimate. Apportionment of common cost is an estimate. These are all estimations. So whenever estimation is there, how can I certify correct? Only fair I can. Fair estimation. See, common costs are there, and I'm allocating it. Those are all done by estimation only. So whenever there is an estimation, then no correct, only fair. Whereas receipts and payments account, you give me, I'll certify correct. Because 100 rupees I got, 90 rupees spent, 10 rupees in the bank. That statement I'll certify correct. 100 I'll give you correct. Because there where is the estimation? How much 100 rupees spent? I'll give you. Utilization settlement, I'll give true and correct. Small companies are exempt from preparing a easy PC. Yeah. B is the correct answer. Absolutely correct. Aditya, consistently you are giving. Yeah. Small companies also have to give notes on accounts, notes to accounts. They are not exempted in preparing notes. Cash flow, they have. Okay. I mean, these questions are not meant to test you like deeply, just to reinforce the learning. Whereas the questions I am asking in my PowerPoint now, they are meant to test you. They are exam level questions. Consolidated financial statement must be prepared if company has only holding company, subsidiary, associate, JV, only foreign operations. Actually, we saw now B is having only holding company now. Okay. So consolidated financial statement must be prepared if company has either subsidiary or associate or JV. All three categories you have to consolidate. Okay. All three you have to consolidate. B, wow. Correct. B is correct. I think this itself is wrong. This part of it, I'll check it up and get back to you next class. When we meet in the next class, I'll check up the form numbers and I'll get back to you. Okay? I'll check up the form numbers and I'll get back to you. Otherwise, things are fine. We have come up to CFS. We have done it. And 129, we will see the last two penalties, and then we'll move on to 130, 131 and all in the next class on Wednesday. Till then, bye. See you. Yeah. I'll just stop sharing.